Let's give you some insight on the very latest in the world of business. The JSE looks poised for positive trade this morning, with global markets lifting in the wake of testimony from U.S. Federal Reserve Chair Jerome Powell before Congress on Tuesday. Jimmy Moyaha, independent analyst, joins us for an update on the latest market news. Jimmy, very good morning to you. Thank you for your time. Give us a sense of how the overall markets opened in early trade and perhaps how badly the rand will be affected by the U.S. inflation data expected.
Good info. The market opens rather positively this morning. We saw green opens across the board. Asian markets were up in early trade this morning. The JSE is up. We're set to have record highs again off the back of some good performance by Tencent, which will filter through to Naspers this morning as well. We are expecting that the U.S. inflationary numbers will be a hot topic, and they will be a key focal point for the U.S. As well as for the rand and for other economies. Regardless of what we're looking at this point, U.S. inflationary numbers are going to be a benchmark for tapering, whether tapering is going to be accelerated, whether it's going to be kept at the current consistent rate. That will also then filter through to what we're seeing and what we've seen over the past couple of weeks with U.S. data affecting the dollar and then affecting the rand as well. I mean, at the moment, the rand is holding steady at 15 Rand 50, and that's a key level for us, because if we break below 15.50, we could potentially see a break below 15 Rand as well. However, should the inflationary numbers at this point cause the rand to weaken, I mean, we've seen a lot of dollar weakness in recent times, and that's what's given the rand a bit of strength lately, rather than any factors from the rand's perspective. And if we continue to see that, we might break that 15 Rand level. But we are overall still expecting that the rand will weaken on a long-term basis. And this is on the basis of the fact that global recoveries are set to be very different. The World Bank has come out to report that they're expecting emerging market economies to recover at a slower rate than developed market economies. So we are expecting the rand to weaken as we go into the year.
And oil extends gains after the Fed comments, while gold slips as investors await the U.S. inflation data. Talk us through some of those latest developments on the commodity side.
Sure. I mean, we saw gold go back and retest the previous month's lows. We saw gold dip below 1,800, but we're back above 1,800 per ounce, and we're almost about to break 1,820 on gold. And this could be a very bullish run for gold as those inflationary concerns come through. I mean, from an inflationary perspective, a higher inflation rate than expected will lead to concerns about stagnating growth. It will lead to concerns about the ability of markets to recover, and that's part of why the global forecasts for growth have been dampened as well. Even if inflation were to come down, or a measure for inflation to come down, particularly in the U.S., is going to be an increase in interest rates. Now, that's also going to have the same effect on growth, in that an increase in interest rates will mean that the cost of debt and cost of borrowing will go up again, and therefore growth on that front will also sort of stagnate and slow down. So from either perspective you look at it, inflation at this point is not a very good thing for growth prospects around the world, for emerging markets, and for emerged markets, developed markets such as the U.S. and in Europe as well. So from an oil front and an oil perspective as well, we've seen that OPEC in the past has wanted to keep the oil price within certain ranges and keep a hold of that oil price, and we could see that continue to happen. We know that supply was increased by OPEC Plus in December, and we are expected that at the moment we're sitting around the $80 a barrel mark. But we don't also want oil to get to an unsustainable price level, given that global demand could potentially slow down as we potentially see or deal with new variants, and if we continue to see China adopt the current stance that they have on their lockdowns. So from an oil perspective, we might see that the oil price might be kept steady between the $80 to $100 a barrel mark at this stage, primarily because for OPEC it's in their best interests to avoid what they saw at the start of the pandemic in early 2020. From a gold price perspective, we could very well go back and retest $1,900 per ounce on gold there as well.
And Jimmy, the World Bank has cut the global growth forecast amid the COVID-19 flare-ups. Give us a sense of some of those developments in that space.
Sure. So, I mean, as mentioned earlier, the World Bank is forecasting that growth will be slower than expected. They are forecasting that the impact of COVID variants or new variants that could potentially come up would hamper growth, but they've also cited that economies are managing this better. Economies are dealing better with the emergence of new variants, and they're expecting that that will serve economies very well. They've downgraded the forecast of the U.S. from 4.2% to about 3.7%. China's been downgraded from about 5.4% to about 5.1%. Again, the consensus from the World Bank is that emerging markets are going to be lagging behind developed markets in terms of their recovery rates at this stage, and that is another key concern for them around global growth, and this is what's led to them downgrading overall global growth from about 4.3% to about 4.1%. Again, on China's side of things, they've taken a very hard stance on how they're handling the emergence of new cases and the lockdowns and the severity of the lockdowns in those regions. So that could affect some supply chain avenues and could create increased supply chain constraints. We could also see global demand on certain things like oil being affected by those increased lockdowns from that perspective as well. So World Bank taking a very cautious stance to say that we could very well see a slower than expected recovery throughout the year.
Very well. Thank you so much for that update. Jimmy Moyaha, independent analyst, weighing in on the very latest in the world of business.